2nd of June. So let's get into the trades that I took today. Let me break it down for you. So we're on NQ. What do we see? First of all, we see the high that we created during yesterday's New York session. As you can see, we dropped massively, correcting the whole bullish move. We failed to retest this level. Today's Asia session is showing that we want to trade higher. We get some 5-minute inversion gaps right here to the upside, and this goes all the way up to this red marked 1 hour fair value gap. And I'm not taking any trades during the Asia session or during the London session. I wanted to wait for New York for price to form itself and give me some nice objective to trade with. So what do we see? Coming into the New York Open, we see that our first 15-minute opening candle is leaving behind a massive wick. So it's basically mitigating the lows, sweeping liquidity, taking all the orders from here. We are sweeping all of the hourly fair value gaps that we have on the bullish leg right here. So basically first one, second one, and we sweep and we move back up through all of them, and we close back at the first level fair value gap, meaning and showing us that we have strong bullish bias, strong bullish structure. I'm dropping to the 15-minute. So the first 15 minutes of the New York session, they were a bit choppy, as you can see here. So prices sweeping it, we're closing back above. Then we have a massive bullish candle with no wick. So because all of the liquidity is obviously swept, we close above and we open above these lows right here. We open above and we have a nice inducement candle. So what was I trading here? First of all, I had my New York high as a price magnet. So basically I was looking for price to sweep this level because, as you know, the market is moving in cycles from sweeping sell side liquidity to sweeping buy side liquidity. So as you can see here, we are bullish, we have bullish structure, and the next and the closest important key level that we have is obviously the New York all-time high that we created yesterday. So what do we see here? As I said, after we mitigated all these lows, we are ending up with a clean 5-minute IFVG, and this is a massive one. So as you can see here, this is the IFVG. We're basically ripping through it. We're closing back above, creating this IFVG, and basically this should have been my initial trade. So I would put my stops below. I would put my stops below the IFVG, and I would put my TP right like to the New York high if I would enter on the candle closure here. So I would get a beautiful risk to reward of 1 to 3. And as you can see here, price is playing out beautifully. But this wasn't exactly the thing that I did. I was waiting a little bit longer. I was waiting for price to react from a 3-minute gap. So this is a 3-minute fair value gap, a bullish one. We see our first wick inside, a closure. This was the point where I entered. And basically what happened here, guys, is that I had my stops obviously placed below this low that is given, below the first low that is given right here. And price is taking liquidity, manipulating here, faking out, sweeping the previous low where I had my stops below, but the stop loss order wasn't active for some reason, I don't know. As I'm back at the charts, I see massive wick alright, what is happening? I'm still in the trade. We are going, we are pushing to the upside. That was lucky. I think this, I could have prevented this if I would be entering off the 5 minute IFUG as I just showed you. So yeah, this would be a better solution. But yeah, I took what I got. I took everything that I got. So I just let the trade run. So as you can see here, price is pushing up. At this point, I decided to put my, basically this point, I decided to put my stop loss to break even. I placed an alarm, but I wasn't at the charts at this moment, so I couldn't put my stop loss to break even. As I was back at the charts, price already made this huge move, and we were already at the break even point. So at this now, very important, guys, listen. At this point, I had two decisions. Like I had two options. I could close the trade at break even as I was at the charts, or I could just follow the trade and leave the stop loss in place, even though I wanted to put it to break even once this level right here was reached by the price. So what was now you have to really follow your rules. Now you have to um, really get into your strategy and follow through with the thing, with your protocol. So my objective was to put stop loss to break even as price was right here. I hadn't have I didn't have the opportunity to do that at the moment. So I'm not doing that as I'm back at the charts, price is already down, and this is not my objective. I don't put a stop to break even just because price made all the way back to break even. So I'm just letting the trade run. And as you can see here, we are bouncing off. We're like actually edging my stop loss. Price is bouncing back up. We are creating another 5 minutes IFUG, which would be a second opportunity for me to enter a trade. Basically right here. So I could just enter off um, the first candle closure, or I could be entering and adding to my position on the retest of the fair value gap, as you can see here with the bearish candle. I can put it the closure, put my stops below the wick, and I put my TP exactly at the same place, so at the New York high level, and we would have a risk to reward of 1 to 5.3. So this would give us an overall risk to reward of, what was it? I think so it was 2R to 9, so something like I would make 9R on the day if I would add to my position at this point. Um, haven't done that, so yeah, but as you can see here, I ended up winning the trade. On the second push up, as we swept this high right here, I put my stops to break even and just waited for the waited for price to hit my TP. Beautiful. So moving on, my second trade on gold, I made it. I think after I placed my NQ trade. So basically, let me break this down. So the situation in gold is a bit different. It's slightly different right here because we are in a sort of bearish trend right here, and it's not quite bullish. So when we are trading NQ, we are, as you can see, we are in a clear bullish structure. Gold isn't showing the same thing. So as I was taking my trade, I was looking for longs, and I entered off. First of all, I saw that we rejected this displacement right here with these two candles. I dropped to the 5 minute chart, the 5 minute time frame. Then I saw the 5 minutes IFUG right here, price close above. I enter the trade. I think, so I basically put a fixed 1 to 2.5 or something like that, something around these highs. And yes, as the trade goes, I see something really, really important. So which is this thing right here. This was a 3 minute fair value gap, and I saw that price already failed to go above that. We respected it once, we respected it twice, thrice, then the fourth time, the fifth time, as price came back up for the fifth time, we see that we slightly close above, or is it even close? Yeah, it's a slight closure above. And at this point, I was just going like the the perfect execution of this and the perfect management of this trade would be the following. I would be entering the trade, and the trade is risky because we're trading against the trend. We are trading a possible potential reversal right here. It's all right. So going for a 1 to 2, we have a 5 minute IFEG. So as you can see here, price is coming to the um, to half of my TP, reaching 0.5 of my TP, and this would be the point where I put my stops to break even either way. So I'm already at break even, and then you can see price dropping to break even. So basically, we trade, we trend. Price is coming back up, reaching the 0.5 level. At this point, I'm putting my stops to break even, and on the next candle, I get stopped out. But this would be alright. This was a trade. This was a risky and rather not high probability trade to trade for longs. So yeah. But my actual decision making was slightly different. As I said, I saw this 3 minute rejection, 3 minute fair value gap rejection. As we touched it, then I noticed that I'm trading against the trend, and this was overall it was tricky. I noticed that I shouldn't be doing that. It's not a high probability trade, plus the confluence of the rejection at this point, so I just exited the trade on my break even. It was a manual closure of the trade, so it wasn't an order or something. I didn't place my stop loss to break even. I just executed it manually and closed it at break even. As you can see here, it was the right decision because the biggest confluence and the strongest confluence was our predominant bearish trend right here. Yeah, so for everybody who was trading against it, um, this is quite a lesson because we are in a market where price is not really showing us a clear direction, and it's not really optimal to trade longs here. Guys, thank you for watching. I'll see you tomorrow in the next trade recap. I'm gonna be trading again, breaking down, learning, and taking more and more lessons. Guys, I honestly see how much I improve emotionally, and I think that I want to give that knowledge to you. So I'm gonna be working on some emotional and psychology videos for trading, and maybe there's some insight for you that